learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it. Working to the cover.
All right, ladies and gentlemen, I got your Watchlist coming in on March 23rd, 2020, and the futures are plummeting right now as we await for more stimulus, or at the very least, some clarity on what is going on with the stimulus package for the virus. But you even have Trump talking now, so this is a limit down halt almost instantly after it got open. You will see some more movements even pre-market. Stimulus, what Trump says now, some of these actions rolling out, California, New York, all that is going to have an effect. But then really what is coming out of Congress right now, that is what we got to keep an eye out for. So I have the main keys we need to be looking at for tomorrow. I have the plays that I got on Friday and what I'm looking at coming in tomorrow and what we should just be watching at overall this week. And then a few other things. But let us not waste any time. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing. YouTube.com/thestockmarket. You could watch all of this live. The futures, the commodities, the keys, the robinhoods, everything. I hope we see you there. And please be positive and respectful. That is all we ask. But do not forget the most important thing you need to do. Post your watch list below. Let us know what you're looking at. You got any plays, comments, remixes, anything, you need to post it below. We got to source that information. I even have a task. It's going to, when we get to the play, I will show you, but I have a task for some of you guys to start sniffing out a specific type of play that we have. So let us not delay. Let us get right into it. As far as the keys, this important thing, and this is what caused the futures to make a move. They already delayed one of the times they were going to vote. It was supposed to happen a few hours ago. They delayed it till just about like 10, 11 minutes ago, 6 p.m. Eastern, but we still haven't really got a word there. So what happens in this stimulus tonight is this is pretty much that Lehman Sunday moment. But if you recall, last week we saw something similar with what the Fed was doing. And again, Friday we saw the Fed moves, and this is something I brought up. I said pretty much if we, the fact we closed down another 4.5%, the fact the futures are down right now, and just in general, Friday was a bad day after having the first day of the primary dealer credit facility. That was pretty much the last shot that the Fed really has until they get more Fed approval. So that is even in the bill right now that they're discussing. They're trying to give power to the Fed right now to be able to start buying more corporate debt, and this could free up some more capital, but we'll see. But whatever happens tonight, whether we come in tomorrow with stimulus confirmed or not, this is going to be important because we haven't heard much from the Fed. So after what we saw on Friday, that could be it unless they vote something else into play. But the thing Wall Street is going to be looking for, the thing investors, the thing that's going to be moving the stock market, people want to see if there's going to be a quick response to this, if they're able to get rid of a lot of the red tape and bureaucracy and come together and be able to make an economic plan come through. That is going to be huge. However, if it looks like there's going to be a political battle and it's going to actually take time for some of this stuff to get approved, Wall Street and prices might see more volatility, and you're not going to see the pain go away. And you're going to need some sort of change enacted just so we could see the Fed act again. Otherwise, right now, we're just responding without the Fed. And now to put some of this into play moving forward and what you should pay attention to, this even has to do with the UUP play. This has to do with this dollar liquidity, this dollar strength we've been talking about. A lot of people have been talking about it now. But this is why this stimulus and how fast they get it, and now even take it this into context, why are you seeing all this stuff? Why are they pushing, and that's a big key sign when they start looking to speed up processes that usually take a long time, like drug approvals, like passing laws. That's how you know there's more serious scope going on, or there's a more serious situation than not. But that makes sense in this context because now, however long it takes for that stimulus to get there, and not only agree, but literally think how long it is going to take, whether they agree today, they agree tomorrow, whether they agree 2 weeks from now or 2 months from now. But however long it takes for that check to come through and literally hit the pockets of Americans, let the effects of lower rates come in. And then, again, in conjunction with what you saw the Fed do, this is going to show us that we won't see any real dollar weakness until those checks actually start hitting, because the key is now money is it's not changing hands as much as it used to. And that's from the global context, whether it be international trade. down to even companies and even domestically, which this is a very unique situation. And that's why the speed and the size and what we're seeing from the government here, how they respond to that is going to be very, very important. And that's what markets are waiting for coming into this next week now. So that is going to be really, really important. Next, on top of all of this stuff, tomorrow is going to be a wild day. So I already talked about this. I told you guys, be careful. You even got the disclaimer here on screen. You barely see it because I got a white background. There you go. Option trading, Schindler's, you handlers all the most financial, please don't financial, personal. I think you're wonderful day. Do not trade anything you see on stream here, but tomorrow is going to be a day, and I'm documenting this because I want to see what happens. I'm going to make trades to get an idea of where things are at, and I'm going to throw out a lot of what I like to call tests, and I'm going to see what's happening. I want to, I will probably be hesitant. There's going to be a lot of stuff I won't know, but I do want to see how tomorrow trades. It will be the first day of electronic trading, so get ready. Really the opening and closing of the market, that's really going to be the place that I'm theorizing will have the most effect. But let's see. So how we open tomorrow, middle of the day, I mean, make sure you have your other brokerages set up. It's going to get a little messy. Or and that doesn't necessarily have to mean anything on the bad sides because, who knows what could happen. But I just think there's going to be first day of something, even the first week, it's going to create a unique situation. So have that, but let us get into the plays. So I got a few different plays that I'm going to be looking at. Here are some of the plays that we made on Friday, and I'll share with you the idea that I have there. But I grabbed this Microsoft January 60 put. I grabbed 5 of them at 198. And this is something I'm going to be looking for. I figured I'd grab one. I spent a decent amount of $1,000 on this one. I want these companies, like I talked about in the video, they haven't gave back as much. Now, with a lot of the talks, though, a lot of people are signaling that tech it might be some of the safe havens, believe it or not, but I'd rather get something out there, and that's where I want to set up on this. But now I want to start looking at the longer term contracts. I'm trying to see how they valued, so I threw one in there. That was the first play I made. Then the next play we got was a UTX, and now this one started to move. And now if you aren't familiar, UTX and Raytheon, there was a buyout agreement, or they were going to do a merger. It was both stock and shares, and it just got approved by the EU, which was interesting. But now it started to move, and now this is something I wanted to give you guys as a task to look for. Go find any deals that have been a big merger, acquisition, or anything that still necessarily hasn't been finalized, where it hasn't gone through, because now with equity prices moving so much, this is upsetting stuff. We already saw it last week with Tiffany's. Now you're starting to see UTX move. So I played this play. I did it pretty quick because the news was dropping, and I got the April 17th, which one was it? The 65 at 350, but this one was playing. It was just like the Tiffany's one, and these ones are usually the high riskier situations. So I liked it, though, the fact that, because I remember how UTX and Raytheon moved when they had the approval, so I figured UTX would be the loser there, but they started to bounce up as Raytheon did the reverse. But I'm going to be holding it. It's kind of a double whammy play, but I like them. Then the other play, a lot of people had questions on this one. This was BLK. So this was Blackrock, and then this had to do with Ronin Capital. So we talked about it with TLT. We brought that up a few days ago, or a few weeks ago when we hit the first big TLT. Oh man, and I'm going to talk to you guys about TLT today. I forgot to even mention that. Oh, and the fact that after Friday, we should see more contracts tomorrow, so keep that in mind. But like we were saying, when the first time TLT hit, we were expecting that somebody blew up, and now it came out on Friday that it was Ronin Capital. These were the guys who, it was a $15 billion fund that they blew up. They had a forced liquidation. They were trading. They were shorting the VIX. But my logic was somebody's coming out with that. They're going to be connected to somebody. It's not usually one of the, these things come in pairs or they come in bunches, but I want to know who's connected to them. And now this even relates to what we saw last week with the companies pulling bit lines. One of them was Blackrock, or Blackrock advised, because they have a lot of ownership in a lot of S&P companies. They advise a lot of their companies to pull their credit lines. So I made a pretty big play. I wanted to make sure it had a little bit more time, but this play was actually within 1 or 2 standard deviations. And this is what I'm hoping for tomorrow, that we start to see more out of the money contracts on these chains, because again, depending on the company, you're only seeing that on the really, really short term, and then those out of the monies are toast, or you're not getting, longer term contracts without having to pay a premium. But this one we had to pay a lot. So I got a 210 put, and we were able to buy this at 1600, 1650. Large spreads and everything. We bought it right before stocks kind of sold off a little bit more throughout the day. There was BLK, and then finally I did NOC. This was an average down, and I like this. And now Some people had a little bit more talks of money going to defense spending or how they even want to ramp that up with what we got going on. But these plays, I liked it because they have time. It is playing the defense sector and kind of just with the instability of stuff. I mean, defense is surprisingly important in all realms, I think, and this is why I want to make sure I get time. I do still want, I don't want to be caught off guard for the upside. However, we are in a weird time downturn, so I did get those Apple calls last week, but I do like these NOCs, so I got more of these, and now I didn't average down the first trade I made. I put in $1,200, but on the second one, and we got, which one? I think we got the 560s at first. And then this time I was able to average down and get the 540s, and I bought 10 of these at 75 cents. So I spent about $7.50, but that was the idea now. And, you know, the fact that they have a lot of time, we are really far out the money. So if I do start losing, we're even down on those 3Ms. We bought calls as well, too. Even most of the calls we got crushed pretty bad. And I was very, very surprised with that. But I like the fact that they have time, because once you do start seeing the move come in your favor, they're going to hold up better than a weekly. But still, the idea here is that with these, as long as they have a lot of time, if they do get cheaper, you have to just be careful. It's a very, very slippery slope to keep averaging on a losing position. But we lost 50% on the 560, so I got closer to the money, and that's how I want to keep doing it. Is I could even spend less and less in amounts, but if these get cheaper, the idea is to get closer to the money instead of buying down the same far out of the money. But there was that. Like I said, watch out for those plays that we talked about in terms of companies like UTX. But now I have another set of companies I want you guys to look for, and they're related to some of the plays that we're holding. So right off the bat with everything, we talked about Microsoft and UTX and BOK and all those other ones, but now TLT, I'm still holding that TLT, and one thing I want to talk about it now, it could be a decent time to get in on them. Now, I'm keeping this in mind. I think it's a decent entry right now. The fact is they still have premium, and I guess let me show you guys my thesis with it, or what caught my attention now, because the calls went down. They were a lot cheaper at one point on the morning. We could even go to the weekly chart. You know, they had a fat finger here, but they could have got cheaper. Now, these are the June contracts that we've been holding, those June TLTs, but they're only up 688. Now, why does this kind of catch my attention? When do we buy those? We bought those on March 3rd. But now take a look to the next play, and this is when I'll talk about HYG. We bought these ones. Okay, we bought them a little bit earlier on February 24th, but these still had a somewhat of a premium. Pretty much, I think they had 300% premium when we, by the time we got the other TLTs. That's why I didn't want to. I bought more TLT and I didn't get HYG because HYG had more premium. But these are still holding up 3,000% premium, and this is what can be pretty much be seen here between TLT and HYG. There's HYG. HYG has been slipping. TLT has been dealing with this, treasury fiasco in the Fed. So they're kind of held up. I mean, they're either lagging or leading in some area. So the fact that the contracts are down to 600%, I think it could be decent. I don't know if I'm going to buy any more of those. I'm looking, but now, I mean, it's just keeping me in check there, because pretty much at this level, and they've held that price. I've been holding these contracts throughout the midst of all this. We rode these things up to 30,000. They came back down. We've had them this whole time. Man. Can we even see the main chart? Yeah, we've held it from here, and you can see it's holding down at these levels. What I'm expecting this chart to do now, this is either it's going to base and now it's going to come up from here, or it's going to drop now. Then if they capitulate from here and TLT fails, we should be able to get these now at 300% gain. That would be something I could justify as one set, and then even if it drops below there, then we get to buy them cheaper than what we paid. But I like them here because they're either going to go up or down. I mean, duh. But again, notice how we've been kind of waiting for these to get favorable. So I'm going to be looking at some of those, but I already have very, very decent exposure to it, so I'm not going to force it there. But watch them. Watch HYG. I still like those. And now the second set of plays I want to go over are going to be these three right here: CAH, UNH, and BABA. So I'll start with BABA, and the main point with these companies is we have these plays. So remember, I sold out of some of the other ones earlier. You can see here, remember these BABA Junes? These were the cheap ones. Remember, I had the closer ones to the money. I bought these, and then I sold out of them. But the idea here is that, we bought these. I got 10 of them at 45 cents. So they're now at what, like 120. They're up 300%, 236%. And why I'm saying that here is because now I'm trying to pay attention. If and this is why I'm even looking at the long-term contracts. We have to see how the prices are moving and how the volatility is getting priced in if the VIX and everything stays. But now I'm comparing this to some of the plays that are still up, a substantially larger amount. And the GLDs are down 25%. I just noticed that. So that could be another one too. But GLD has less time here. So this one, BABA June, they're up 200%. These are ones, it's going to kind of be like the TLT, where these are either going to come down in value or they're going to come up. The next play I have in mind is also UNA. These were up 600% earlier. I think these are a little bit more expensive. I think we bought these at like 50 cents or something like that. Yeah. I think these just have a large spread, but if the UNHs come back, I like those. And then finally, this one right here, the CAH 22.5 put, it's up 64%. So this one has till September. So you're getting to see these are contracts. I mean, it doesn't necessarily mean that these are good to buy now. I'm paying attention, and this is to give you guys some insight into what I'm looking for when it comes to option pricing and everything. I'm trying to find the companies, we have exposure. I still have EEMs, HYGs. You see, I have some that are up a couple thousand%, some that aren't up as much, some we already took profits on, but I'm trying to figure out which companies have more premium or not, and then some that I've been holding for a while. So I've been keeping my eye on these. I've been in these positions for a few days now. As some days and some weeks go by, and you start to see how they move in prices, that's where you could kind of get an idea of, okay, data's about to kill these unless there's this type of move. These are going to get cheaper, and then we could get more on more dates, or we just ignore the play, or you could kind of see the fact that they're holding up, and then if the stock goes into that next level, those were going to be the ones that were expensive, got cheap, and are about to frog again. So that's why I'm looking at those. I'm going to be keeping those in mind. So BABA, CAH, UNH, and then finally, I want to be looking at the banks tomorrow. I think they're going to be very, very important with everything going on, especially what we see with the stimulus, how they plan to do that. JP Morgan, again, we got Blackrock. Blackrock is kind of like a bank, but financial services will be good. Another one, this one got talked about a lot. I want to see the options, and hopefully, again, that they add options tomorrow. But Morgan Stanley, I think we look over them a lot, but they could have a big effect. And then, of course, Bank of America, some of our older strangles expired. So I want to see if we could set up something new there. And then finally, UUP, I'm still in the dollar play. I like it. And again, the same thesis is I think we have to watch out for real dollar strength, which will happen at various moments. I think it depends on people's outlook of when they expect the money to come and depending on that liquidity crunch. But I'm going to be watching the UUP, still holding that full position. We're up on that. I'm going to be watching Apple. And lastly, I would even watch any of these. These could kind of qualify like CLX, Triple M, these are the ones we have calls in. We have calls in 3M and Apple, and then CLX. Those puts are only up like 180%. But I think a lot of the stimulus, they're doing stuff along the lines of banning buybacks, but also banning dividends. That is going to change a lot. It's even going to change my outlook on some of the long-term companies. I really, really don't like that. And if that occurs, though, you're going to see another regime shift, and this could affect a lot of these companies. So we have to see what's going on there. But there's going to be a lot. I hope you guys are ready. It's going to be exciting. Tomorrow's going to be an opportunity. Make sure you guys get endurance to space it out. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. You better get your armor on and that helmet shining. Do not lose your head. I don't care if you made money, lost money. You're going to keep learning stuff. Brush it off. There's going to be opportunity every week. Do not force it. Don't make the same mistakes. Just know where not to go, baby. I rebuke the FOMO. I love you all. I'm going to see you in the morning. Let's go.